Gold prices traded in a wider range today, trading in a $40 range, but ending the day higher despite the higher than expected CPI. The Consumer Price Index came in year over year at 9.1%. That takes you all the way back to the early 80s, last time we saw a print like that, but ultimately gold prices traded lower after the CPI print. Higher inflation means more aggressive Federal Reserve, which means higher rates, and as gold being a non-yielding instrument, traded lower, got down to about 1700 before it saw a bounce, 1704 exactly in the futures in the August contract. Lowest we've seen since August of 2021, but did see a relief bounce higher as a lot of uncertainty comes into play. We saw those yield curves flipping inverted, 2s, 10s, and 5s, 30s. While longer dated treasuries were lower in yield, we saw short-term interest rates moving higher. A lot of uncertainty out there, and a flight to quality bid to gold ensued, getting us back not only positive for the day, but higher on the day, ending at around 1735. Again, despite a higher than expected CPI and higher odds that the Federal Reserve will raise rates more aggressively. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that prior to CPI, we did see volatility moving higher, that pre-event pricing in of risk that we typically see. But afterwards, we saw volatility move lower. Didn't see it drop like a stone, but we did see it nudge lower, ending the day lower. Clearly, the market has a lot to look in, a lot to absorb here this week as we move forward and closer to that July FOMC meeting in about 2 weeks. But clearly volatility right now trading a little bit lower today, likely will remain sideways until we get more data, until we get more information, until the market can absorb all that's happened over the last session. Last, let's talk about what's coming up the rest of the week. Tomorrow we get the PPI number, which we already know CPI is high, PPI also expected higher. We also get the claims number, our in the moment look at the job market, and claims have been slowly rising. So right now the Federal Reserve, which doesn't like high inflation, also doesn't like higher new jobless claims. Clearly that is a number they'll be keeping an eye on as well. We also get some Federal Reserve speakers, one being Fed Governor Waller. Today we had a couple of Fed speakers, both talking about the CPI number and its effect on Fed policy. That is likely what we'll get tomorrow from Mr. Waller as well. So gold prices midweek, hovering right around 1735 after dipping its toe very close to 1700, rallies back strong in the face of a higher CPI, a more aggressive anticipated Fed, and a lot of uncertainty.